Hi, everybody, and welcome to the October 2024 Economic and Market Update, presented by Commonwealth Financial Network. My name is Brad McMillan, and I'm Commonwealth's Chief Investment Officer. September was a solid month for investors as falling interest rates supported healthier returns for markets. Both the S&P 500 and the Dow set new all-time highs during the month, while the Nasdaq got close. Bonds were also up for the fifth consecutive month, so all in all, it was a solid end of the third quarter. Interest rates were key in September as the Federal Reserve cut the Fed funds rate by 50 basis points at their September meeting. This was the first interest rate cut in over 4 years and showed the Fed is shifting away from restrictive monetary policy to a more supportive stance. The cut in September was larger than most economists had thought, but in line with market expectations heading into the meeting. Markets rallied following the announcement as the cut was taken as a sign that the Fed remains committed to supporting both sides of the dual mandate, inflation and employment. Because although we've seen solid progress in getting inflation back down to the Fed's 2% target, there are emerging signs of weakening for the job market. Given the fact that the Fed is tasked with supporting both stable prices and maximum employment, the rate cut in September was widely viewed as intended to support the labor market. Looking forward, markets are pricing in more cuts at the next two Fed meetings this year, with further cuts expected next year. For investors, lower interest rates are generally viewed as a tailwind as they can help support valuations and fundamentals. Now, speaking of fundamentals, we saw further improvements during the month, according to Bloomberg Intelligence. Second quarter earnings growth for the S&P 500 came in at nearly 14%, well above the 8% increase that analysts had forecast. Given the fact that earnings ultimately drive long-term market performance, this was a positive sign for investors and highlights the continued health of the U.S. economy. While the solid foundations helped drive performance in September and the third quarter, though, there are risks ahead that we need to watch. Here in the U.S., the primary risk is slower growth, as shown by the recent cracks in the labor market. While the Fed's attempts to support the economy by cutting rates are helpful, a further slowdown in hiring as we finish out the year could spook markets. Beyond the economy, political risks are also rising as we approach the November elections. And of course, it's not just risks in the U.S. either. There's an ongoing war in Ukraine, and the violence in the Middle East continues to expand. China's economic weakness is also worth monitoring. It could be a rocky couple of months. But while there are real risks out there, on the whole, we remain in a relatively good place as we head into the fourth quarter. Market fundamentals remain sound, and the headwind from high interest rates is set to transition into a tailwind in the months ahead. While there are certainly risks out there, the most likely path forward is still for further economic growth and market appreciation. And that's a good place to be as we start to close out the year. That's it for this month. Thanks for watching, and join me again next month for the latest news. Until then, be sure to check the Independent Market Observer blog for more timely updates and articles. Stay safe, stay sane, and stay healthy. And have a great fall.